Australian stocks shed $172 billion in H1. Analysts see extra pain. Australian stocks have been set to lose a tenth in their market value in the first half of 2022, and analysts warned of extra pain in advance from a significant bank counterattack to tame surging inflation and fears of a slowdown in predominant international economies. The benchmark S&P/ASX 200 index has shed kind of 250 billion Australian dollars, $172.05 billion in marketplace fee amid coverage tightening, the Russia-Ukraine war, and fears of a recession. The index fell in 57 out of 123 classes, declining extra than 10% over weeks in June, all through a commodity rout that driven it firmly into the purple and showed the marketplace turned in a correction. Technology and banking shares had been a few of the fundamental casualties inside the first half, even as iron ore miners have been offered off late. Graphic. ASX 200 H1 performance, 20 image percent 201,656,555,5157.png. The Reserve Bank of Australia (RBA) added a larger than expected 50 basis point charge hike in June after customer expenses hit a 20-year excessive. Analysts foresee continual volatility and possibly steeper price hikes to continue weighing on markets. I suspect the RBA remains behind the curve and may be pressured to up its very own cash price forecasts. Ultimately, the RBA is now gambling catch-up, and this runs the threat of spilling over into H2 and weighing on equities, said Matt Simpson, a senior market analyst at Citi Index. The pleasant final results for the ASX in H2 is for oil fees to fall with inflation expectancies. And right now, that looks unlikely. Graphic. Major Aussie subindexes versus benchmark, 20 image percent 201,652,552,993,765.png. Tech stocks plummeted extra than 35% in the first half of and could in all likelihood continue to be underneath the pump as valuations become worse, bond yields upward push, and a growth in niche subsectors inclusive of buy now, pay later fades away. No doubt tech valuation has come off appreciably from its COVID-19 top, but we might not be out of the woods yet. The dangers of further re-rating and downgrades are truly present amid the slower growth environment, stated Yeep Jun Rong, a strategist at IG. The tech subindex has a price-to-earnings ratio of 53.74, nearly 5 times extra than the benchmark's 10.88. Australia's large four creditors misplaced among 2.5% and 14%, as the RBA's policy sparked fears of a sell-off within the housing market. Major commodity corporations outperformed, but, as expenses had been properly supported for maximum of the half. Rio Tinto, NYSE, Rio, and BHP rose 6% and 15.7% respectively, at the same time as coal miners Whitehaven and New Hope (OTC), NHPEF, additionally soared. Graphic. Major Aussie blue-chip gainers and losers, 20 image percent 201,656,553,976,005.png, $1 equals 1.4531 Australian dollars.